Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. XLK, Apple, and Facebook on the daily weekly time frame. So a significant pullback in the tech sector today. We did break the low of Thursday just barely by 4 cents, but it is a lower low. But just like Thursday, the bulls did buy the dip. Hourly oversold dumps are a buying opportunity in 2017, and that remains to be the case with the long lower wick we saw in the tech sector today. So we still have the daily middle Bollinger Band support. We are on the verge of a bearish MACD cross, so there's some signals to be, cautious of. We have to watch to see if we can set a higher low and a higher high on the hourly time frame from this bounce, because as of right now, this is just an oversold bounce, and we need that higher low and higher high looking at the hourly time frames to see that follow through. So we are starting to see a little bit of profit taking. The most significant bearish action that we've seen in the past month has occurred in 2 of the last 3 days. So we have to be aware of all of that. The weekly time frame after a month of straight green is a bearish reversal candlestick that's going to likely lead to some healthy consolidation. We have not seen 2 red weeks in a row since early August, so it's been a few months since that has happened, and that's something to be keeping an eye out for. Apple with a bear break today, but still holding on to the middle Bollinger Band daily support. So the low of this 5-day range is 155.02, and the high is 155.75. And we're staying pretty much right within that range, and we're looking for a break of that range, and these moving averages are tightening up that are going to give us a guide as well. So essentially, I will be bullish short term if we break 157.75, and I'll be bearish short term if we break 155.02. Weekly time frame, again, I keep pointing out that potential bearish reversal head and shoulders pattern that I'm keeping an eye on. We're still well above that neckline of support, 149.16. But when we can drop, $1 or $2 in a day, we certainly can get there pretty quickly, so it is worth keeping an eye on. But as of right now, no red flags for the bulls unless we break 155.02. That would be red flag number 1 that we're going to see continuation down. Facebook on the daily time frame was the weakest name on really the past couple days. It was the weakest tech sector name. And the clear inside bar bear break, and we had one on SPY as well, but that was at 171.50. As soon as 171.50 broke today, that was a bear signal, and of course we ended up dumping very significantly past that point. The bulls attempted to hold the 50-day moving average, couldn't do so. Support down here, 168.29. We held that level by 60 cents. Bullish reversal candlestick. Well, it's not actually a hammer. It doesn't fit the definition. The real body is too big. You need the wick twice the size of the real body of the candlestick, and that's not currently the setup that we do have. So we do have to be a bit cautious. Again, Facebook earnings are next week, and the tech sector bulls are going to be buying Google and Amazon earnings, or they're going to be buying the Google and Amazon dip for their earnings first before, after tomorrow, after hours, I believe the momentum of attention will shift back on Facebook as we approach earnings next week. So the weekly time frame, fairly significant pullback at this point. And again, we're watching these exponential moving averages, which have been support the entire year. If we close below 171.44, we will lose this support, and that will be notable, and will have us looking at the weekly middle Bollinger Band support to be tested in the near term. So that's what we're watching into tomorrow. Again, hourly time frames are our guides in terms of strength of this bounce. It's very easy to distinguish individual names and who's stronger and who's weaker depending on the moving averages and the oversold hourly bounce and where they stand comparative to those moving averages. So I appreciate you watching. We'll see you tomorrow, and keep an eye on those tech sector earnings. Google and Amazon after hours is going to have a significant impact on the entire sector in terms of correlation.